So good afternoon, everyone. On behalf of Softlogic stockbrokers, I would like to warmly welcome all of you who have joined with us today on our panel discussion on Sri Lankan apparel industry. So as all of us know, apparel industry is one of the most vital foreign exchange earners in the country, which brings in more than $5 billion annually and also contributes to about 5 to 6% of GDP. So hence, given this pivotal role played by this industry to our economy, we believe this sector should be prioritized at this very critical juncture so that the sector could further boost the forex flows, which is much, much needed for our country. So all of us know that our country is suffocating at the moment from one of its worst economic and political woes, where industries to households all are being hampered by different shortages of essential commodities and power outages. Hence, at these unprecedented and challenging times, we think it's our responsibility to make our people aware of what hardships this key apparel sector is going through, and also on various avenues where the industry could capitalize on so that it could enhance the forex income, which is very much crucial for our economic growth. So ladies and gentlemen, let me introduce to you our eminent set of panelists which we have with us for our forum today. We have Mr. Felix Fernando, the Deputy Chairman of Joint Apparel Association Forum Sri Lanka and Director of Omega Line. We have Mr. Puputu De Silva, Group CEO at TJ Group. And also with us, we have Mr. Dilanka Jinadasa, Group CEO at Hiller Apparel Holdings. So thank you, gentlemen, for joining with us amidst your busy schedules. So for our audience, give a brief overview on our agenda today. So we would initially be having a discussion on industry position, challenges, and future outlook, which will then be followed by a Q&A session. So would appreciate if all of your questions could be taken up at the end, and request you to pose your questions via the Zoom chat box. Okay. So let me start the proceedings by posting my first set of questions to you, Mr. Fernando. So Mr. Fernando, since you're representing Jeff as well as Omega Line, how do you view these challenging times for local apparel manufacturers? And if you could explain to our audience, what measures has Jeff taken to sort of ease out any pressure from the local apparel players? So over to you, Mr. Fernando, if you could brief us on those lines, please.
Yeah, first of all, thank you, Sambini, and for that introduction, and also thank you for inviting me for this as a panelist. So I'm not sure whether if everyone is aware what is JAF means. JAF is the apex body for the textile apparel in Sri Lanka. Now we have 5 different trade associations. They are the main members of JAF. The biggest is the Sri Lanka Apparel Exporters Association, where we have about 76 members, and followed by we have the Sri Lanka Garment Manufacturing Association, Free Trade Zone Manufacturing Association, and Sri Lankan Apparel Sourcing Association. So these are the ones that form basically the part of JAF. So why JAF? Because we, until 2002, in different associations were going on different directions. So we thought maybe it's very important, since the apparel industry for the I would say survival as well as growth of the industry. I mean, we need to bring all our problems, bring all our issues as one body, where we have more sort of not bargaining power. Yeah, I would use the word bargaining power also, because sometimes, the countries, whether it's bureaucrats or the politicians or whoever they are, I mean, they don't see the bigger picture, so they may make some decisions which have been quite harmful to the industries. I mean, that's why we are quite bad in our exports also. I mean, we are still, we have seen that 20 years ago what Vietnam was producing, exporting, now what we are exporting and what they're exporting. So it was tough, especially with the COVID pandemic. I think that's really, I mean, give a makeshift to the JAF activities as well, because until such time it was mostly to do with the strategic level, maybe the regulations, rules, regulations. But here comes COVID, and it led JAF and all the other institutions also to get into more operational and more operational, because we had to survive. We had to we couldn't let the factories to be closed. So from there, those challenges, and now if you look at maybe after this, especially after uh, beginning of March, we have been having so many problems. But even prior to that, for the last 1 year, 1.5 years, we have been uh, we have foreseen the problems to come. We have informed, we have been keep on informing. So the role was like, let me start from the COVID time. So the first one as a JAF, what we have done was we took the challenge, and first hurdle that we need to pass was to make sure, okay, in spite of the COVID and a lot of countries locked down, we had to make sure that our factories continue to work. So that was a bit of a struggle, like maybe there were some authorities who never understood what the economy was, how the economy. So we need to make lot of I mean, use all our charm and convincing power to explain them, how important this industry to keep going. So with that one, so I mean, had to meet the different levels, including the top highest bureaucrat in Sri Lanka, so that I mean the Chi level as well. So I mean the health authorities. I get glad to say that over the time they have understood also. To be very honest, all the time they have understood. So and also we as JAF, we took the lead in making sure that all the factory employees are vaccinated. That one, I think we have done a great thing in there. And also like for the SME sectors to get the WIP loan, cash flow, to help in the cash flow, the working capital loans, etc. And on recently, we have gone a little beyond that also. So we make sure that especially when there were some strikes coming in, there were disruptions. So we more or less just took the responsibility to talk to all the political authorities, including all the opposition also, whether it could be the UMP, SJB, JVP, everything. Just tell them, like, no, you as a country, we can't disrupt the operations of the industry. We need to continue, because that's the currently, migrant workers, remittances from the migrant workers were the highest foreign exchange earner for Sri Lanka, but that's been dropped to about more than 50% drop. So at the moment, we are the number one. So if we do some disruptive activities, whatever the peanuts we are getting, maybe that's also going to get lost. So happy to say that most of them, they have understood, they have promised also, like they'll help, they'll not disrupt, and also like maybe to keep the customs port and everything working as well. So that's some of the activities. And plus, we have been also trying to for the industrial piece, we have been voluntarily talking to the major unions operating in the industry, and we have more or less tell them it's better that certain demands maybe, but at least we have basic understanding. I'm happy to say that they also have understood this is not the time to sabotage the industry, or like. So I think Jeff has achieved something, because probably, I mean, most probably they also have understood recently things also, like maybe if not, we didn't have that agreement, we would have gone for certain strikes or whatever, disruptions to work would have continued for more days. So in a nutshell, I would say, I hope that you are clear what the Jeff's challenges were and what Jeff had done so far to face those challenges.
Thank you, Mr. Fernando, for that comprehensive answer. So let me move on to the next question, which I have for you. So if you could uh, brief our audience about any growth targets that is being set for the apparel industry over the next couple of years, and also about some suggestions and changes that that y'all are planning to make in the industry, so that it will be a much more growth targeting industry over the next few years amidst these challenging times.
Yes. Basically, I think this Sri Lanka's apparel industry is not unlike 30 years ago when we started. We were more or less like a contract manufacturer. We are like a CMT producer. let cut, make, trim. Okay, but we have gone so far. We have come a bigger journey. Probably maybe the Sri Lanka's the quantity, the volume what we produce, because we are a smaller country, 22 million population. But as a reliable supplier, we had the trust, we had the credibility with most of the important brands in the world, because they knew that whatever the order that they give, that with the correct quality for the correct price on the correct time, we will deliver. So that credibility is not one day's job. Over the years we have built that one. That's why certain garments, we are not cheap anymore. Even maybe the countries like Bangladesh or maybe some African countries, they are much cheaper. But why the brands even pay a little bit more and come to Sri Lanka? That's the main reason. So considering that before March, this crisis, the after the what you call dollar was floated, sorry, rupee was floated. Until such time, we have seen for this year about 13% growth from Jan to April, which is credible, 13% growth. But and with that, we've been planning, from 5.4 this year, we will achieve $6 billion turnover. That was our target for the current year. I don't know now with all these disruptions. I don't know, May, June, certain days we lost. So probably, I mean, if we are able to survive these few months, we'll be able to go there. But the news is, like certain time, certainly, like maybe some of the customers, they are a little bit worried, maybe about the country situation and stability and all sort of things. So, but I wish, we will be able to get into that same target, 6 billion. And so by 2025, our target is to get 8 billion. So that's the target we have set. And what we want to do is also like maybe not only not only the quantity, not only the volume. So we may have to give up certain. We are already give up a lot of small garments, so none. The what you call, we need to go to the value-added items, and also like maybe also the designing, sourcing, Sri Lanka. So with that one, we are trying our level best to increase the value addition here, as well as the also like maybe sometimes we are also planning to get the what you call the possibilities. See, maybe let's import from certain countries, like maybe the basic garments, so that we do the finishing, the top part, adding the value. So there are a lot of mix of technologies we are using, and also for the productivity also, like maybe replacing certain manual processes with automation, so if we can increase the productivity. So and also we are pushing, maybe we can get some new free trade agreements. Go with so India is a case, like we have only 8 million pieces per year, which is insignificant. And China also, if we can go for a what you call free trade agreement, and certain countries, if US also, if we can maybe go to preferential market access or something, these targets are not impossible. But of course, whoever, we can do certain things, but it's up to the countries. Rule makers to make sure that we have the correct environment.
Exactly. So moving on to the next question for you, Mr. Fernando. So we know GSP plus is one of these key concerns everyone has when we talk about the apparel industry. So Sri Lanka once lost access to GSP plus concessions to EU. So what is your thoughts on that? So what do you think, like, if by any chance Sri Lanka tend to lose GSP plus concessions again, given the current situation? So do you think our sector can sustain without these tax exemptions? What are your thoughts on that?
Let me say the GSP is like called generalized system of preferences. Generalized system of preferences. Basically, there's something what we call invented by European Union (EU) to help also to balance the trade in the countries, in their countries as well, because they don't want to get flooded with some cheap products from one country or something. So that's why they are basically looking at, they have GSP also three, more or less, one is for the least developed countries. Basically, Bangladesh comes under that category. So they get EB, everything but arms, that call, it's a 0% duty. But countries like Pakistan, Sri Lanka, we have the GSP plus. So that depends on, I mean, that we need to fulfill um, certain agreements, there's certain conditions we have to meet. At the moment we are given 27 conditions. So I think this cycle of GSP plus is going to end in end of 2023. So we will be having the GSP plus continuation until 2023. There won't be a worry because we have met the last time also the EU people, EU from the GSP plus that team when they came. So there's no issue on that. We'll be able to continue until 2023, and we have to apply for the next one, the next cycle, and we have a benefit, of course, because what you are seeing is once we gain the GSP plus from 2017, roughly people say it's at least about $750 million to be able to increase our sales. EU is one of the major partners for our exports. 44% of our exports are going to EU. And so if losing GSP plus will be a concern, I mean, if we have a level playing ground, I mean, everybody is on the same ground playing the equal opportunity, then that's not a problem. But since the ground is not, I mean, plain, like maybe still Bangladesh, countries like Bangladesh, Ethiopia, or some African countries, Cambodia, Pakistan, they'll be getting the GST plus, and we have to come. It's quite a, I mean, quite a, because now what happens is, if we lose the GST plus, hopefully we'll still be able to get GSP, but still the difference is about 3%. 3% taxes we have to pay. So that's not a small amount. And maybe if we lose the GSP also, it's altogether 12% and 6.5%. So having said that one, I believe, I will be able to maintain the GSP plus.
Okay, Mr. Fernandez, so my final question to you, given your busy schedule. So want to ask you, so we know that Sri Lanka imports close to about $3 billion per annum worth of textile related articles. So this is basically, we presume this is for apparel exports on those lines. So is there any mechanism in place so that we could reduce this amount, so that this will some sort of be a cushion to our trade deficit also, this $3 billion, if we can get it down a bit, is there any mechanism in place for that?
Okay, so a few corrections. I don't think we need to, let me be a little bit selfish here. We don't need to be use this opportunity to help reduce the trade deficit. Okay. First of all, if we do just to meet the lead times, to shorten the lead times, because that's one of the most top priorities with the buyers. Most of the orders they place with us, they wanted yesterday, they say. Okay. So that's one of the big advantages. That's some of the advantages countries like India, Vietnam, Cambodia, whatever they have, because they have very, very fast access to the raw materials. Plus this 3 billion, what you mentioned, Sadhine, that 3 billion, entire 3 billion is not for the export purposes. There is a substantial amount of fabric and accessories which are gone to the use of for the domestic consumption as well. So what we look at is roughly about 2.2 billion. That's what we are looking at, about 2.2 billion value roughly we use for the export purposes, the import of this thing. And of course, now we have like TJs here, and then Haley's, then some other companies, Ocean Lanka. So there are something fabric side, okay? Then a lot of accessory companies are here. And the good thing also is that, like last year, about few years back, we initiated having a fabric park at Eravur in the Eastern Province. It's coming up, but I think there are again a lot of red tapes, for the investors. So there are a lot of not clear areas, certain things, that maybe that's one thing, it's the ease of doing business, if not, so far, I don't think that we were able to finalize with any overseas investors, but there are some investors and joint ventures locally that they are going to go to that plant. But the infrastructure for the park is being developed. That's a good thing. So we hope that, because right now our estimation is about, or estimation or guesstimation is about 48% is the value added here in Sri Lanka. Out of 5.2 billion, 5.4 billion, or whatever, 48% is the value addition. So if the Erauru Park comes, we plan to increase it up to about the value addition in Sri Lanka up to about 58, 59%. So that's a good thing. And also, but the only thing is, we need to make sure that, we are able to bring the investors to Sri Lanka. If not, whatever the Erauru, whether the parks we place, is not going to help. Okay, Sandy?
Exactly. So thank you, Mr. Fernando, for all those comprehensive answers. And given your busy schedule, will let you depart our forum now. So thank you once again for joining in. So let me move over to our next
Thank you. Thank you very much, Sadhini, and also apologies that, because I have to leave. Excuse me. I think there are two very good experts in the industry, so I'm sure that they will be able to answer audience questions better than me. Thank you very much.
Thank you, Mr. Fernando, for joining in. Okay, so let me move over to Pubudu and Dilanka. Thank you for being with us patiently. So I will start off the next set of putting out next set of questions to you both. So firstly, I would like to put this first question to both of you. So want to know. So as all of us are aware, Sri Lanka is in the midst of one of its worst economic crisis situations. So want to know if TJ and Hela witnessed any sort of factory closures or loss of work hours due to this prevailing situation. And also would be interested to know how you all sort of managed these challenging times. So Pubudu, if you may start off with your thoughts, please.
Yes, sure. First of all, I can't say that there is no disruption. Of course, different companies manage in different ways. In apparel companies, of course, there was about 1 or 2 days disruption and shut down their apparel factories. But whereas fabric manufacturing is different because we run 24/7 throughout the year operation. Only for New Year that we shut down because of the way that manufacturing is running. So given that context, we actually speaking, we are unable to shut down. So what we did is, with the help of our team members, we were able to run our factories, and even though industrial zones and parks were blocked by protesters, somehow we managed to run our operation because it's 24/7 operation. But there is surely disruption. And when it comes to other areas like utility and the shortage of raw material, etc., yes, it's a tough and challenging situation, not easy to manage. But having said that, we have various alternative sources of getting this fuel, whether it's diesel or furnace oil. We have connected with bunker fueling companies, and we are working. But that is also again challenging due to foreign exchange available within the country. It's not that easy. However, so far we as fabric manufacturers very less disruption because we are compelled to run 24/7 operation. But there was slowdown at times. We slow down our operation at times, and that was unavoidable.
Okay, understandable, Pubudu. So how about you, Dilanka? What was the situation at Hela during the past few months? Or if you could give us.
I mean, for us, we had a couple of interruptions. Luckily for us, the closures that we executed was more as a precautionary measure. So, when the initial unrest happened, including on the 9th of May, we didn't have a specific risk to the plant, but because of the situation evolving every hour, we didn't want to take a chance because, our facilities are locations which, host 1,000, 2,000 people. So it's not a number that you can take a risk with. So in certain factories which we considered high risk, especially those which are closer to Colombo, we shut down earlier. Factories which we were running on a 2-shift operation, so that's where factories run towards late in the night. We didn't bring in the second shift because again we didn't want to take a chance of moving employees at late in the night or early in the morning. So there was certain interruptions that we experienced. Was it material? No. It was manageable, but that said, there was definitely an impact of sorts. I think again, like Ubudum mentioned, as far as essentials are required, be it fuel for vehicles to transport employees or to run generators. We had made arrangements with the government and also, with the likes of, say, for example, like the IOC, where we could use our own dollars to procure them and secure them ourselves. So over the last couple of months, we've been building storage facilities within our manufacturing facilities, and then ensuring that we have at least a week to 2 weeks worth of stock being maintained, so that in case things come to a standstill, we can still run our manufacturing operations and honor the commitments that we've given to our customers.
Okay, Dilanka, thank you for that. So my next question goes to Dilanka again. So we know that global apparel industry is a very competitive space. So given this competitive nature of this industry, what aspects do you focus on in terms of attracting global customer orders? And also, I would like to know your thoughts on, so like currently in the global scenario as well, we are experiencing major issues such as higher inflation, which is sort of dampening the entire consumption pattern. So with all these things around the corner, do you still feel our local apparel players are competitive enough? Or do you see any sort of a slowdown in orders in the recent terms? What are your thoughts on that?
Right. From an overall, with regards to demand, I do think there will be somewhat of a slowdown. And that won't be just limiting to Sri Lanka, but it'll be a global slowdown. And we're seeing certain signs of that, especially during the second half of this year, so like September onwards, which is usually where the spring season starts. And that's due to multitude of factors, from high inflation to potential global recession risks. Maybe sometimes customers are overreacting to potential slowdowns and having a knee-jerk reaction on placing orders. The scenarios like the whole Ukraine situation is not helping because it's driving food inflation and other inflationary measures as well. So there's definitely a lot of volatility that which doesn't help boost in demand. But that said, I can at least speak on behalf of Heller. What we've done is, some of it is work that we've done over the last 5 years, some which we've done over the last 12 months, is we've been onboarding certain new strategic customers who we've executed trial orders over the last 12 months, and now they're chasing up and topping up on their projections and volumes. So as we see certain customers' volumes or the existing customers' volumes come down, these new customers bring in incremental orders, so that kind of offsets the drop that we would potentially experience during the second half. So as far as fulfilling capacity is concerned, I don't see it as a big risk. I think hopefully, on wood, we will be able to run at full capacity, maybe even a little bit more for the coming financial year. But of course, it will lead to margin pressure, because as certain manufacturers start getting open capacity, they will start taking orders at lower margins, and it will build some sort of a pricing war, so to speak. So definitely margin pressure will kick in. As far as the competitiveness, I wouldn't say it's just Sri Lanka. I think Sri Lankan manufacturers will have to be global. Say the likes of even TJ, they're in Sri Lanka and India, and they're exploring other countries as well. We are actually in 5 countries. And then the reason for that is, we need to continue to give value propositions, be it cost, be it duty free, be it lead time, speed, complexity, and you can't give all those from one location. And even if you can, you probably wouldn't want to, because certain customers will have country risks. So, as soon as they reach that particular cap, they would not want to place any more orders. So if you are based in that country, it will cap your growth as well. So because of that, we need to factor in multiple locations, and of course, multiple offerings as well. At the end of the day, you have to be price competitive, but then at the same time, how do you give design solutions? How do you give speed solutions? Compliance is a no, you can't even compromise compliance at all. But then how do you go one step further by being, be net zero? How do you monitor and communicate your scope 1, scope 2 emissions, and continue to go the journey with the brand so that they can achieve their goals by working with you. So that's, ultimately it boils down to that. So I think it's a mix of those factors that you need to execute to not win incremental business, but to even safeguard the business that you have.
Okay, Tilanka, thank you for that comprehensive answer. So on those same lines, I want to take my next question to Pubudu. So we know that given TJ's prudent track record working with many globally renowned brands over the past years, would like to know if you all have witnessed any sort of slowdown in new orders, or have you all seen orders being diverted away from Sri Lanka by major apparel brands over the recent times, mainly given the vulnerabilities within our country? Have you all experienced those sort of things, Pubudu, over the recent times?
As Dilanka said, he gave a very comprehensive answer, and as long as our vendor partners are confident that we will have enough orders, so in turn we get our orders. So on a serious note, yes, as Dilanka mentioned, we have seen slowdown in some of the regions, but that's maybe also due to customers are overreacting and their inventory situation. There are multiple things. Also, if you look at the China Plus One strategy which customers have, and then with that non-trade war between China and USA, there are enough orders diverting into rest of the world and Asian region. So I think overall, yes, customers will have sufficient orders for us, and also they have their location strategy. So they will not put everything into one country, one region, likewise. So I think taking all into consideration, I don't see much impact, but that whatever we need to see, we have to wait for some time, because the country situation in Sri Lanka not very conducive for any of the customers. They look at this as a risk. But having said that, TJ and apparel companies in Sri Lanka has gone through many challenges where we didn't have no issues era or period to COVID, to Easter Sunday attack, then tsunami, 30 years of war, GSP plus, again GSP plus was removed. Likewise, we went through multiple challenges this industry, but however we survived in the industry. So, and also taking what Felix said, still to Sri Lanka is importing about 2.3 billion worth of raw material to the country. So if you see, there is a huge opportunity, as all the mills that we have in Sri Lanka, we are not producing anything more than 500 million in fabric form. So I think we have enough opportunity. It's just that whether we can be price competitive, and whether our execution can be given to our customers, as long as we do these two, because we are playing in world market. And whatever, if we are not competitive, of course, customers will place orders with other regions and other vendor partners and suppliers. So we have been successful in dealing with our customers. We have strategic customers. They have been with us in thick and thin situations that we have gone through. There are multiple times that they have gone through difficult situation, especially in COVID. retail world went into a spin. During that situation, we have helped our customers. We work very closely with our customers. So therefore, we have strategic alignment with our customers. So it's a relationship at the end of the day. Of course, customers will have, as I said, their location strategy, and they will look at country situation. There can be some impact, but we need to have our new business, as Dilanka mentioned. As long as we have our new business strategy and we do innovations development, I don't think we will have a problem.
Thank you, Pubudu, for that very comprehensive explanation. So with that, I would like to move on. Quarterly performance, Pubudu. I would like to congratulate TJ on that wonderful quarterly performance as well as a full year performance. We saw TJ posting a massive top line of $250 million for the financial year FY22. So in terms of your USD 300 million top line target, when are you expecting the company to reach that iconic target? If you could elaborate a bit on that, Pubudu.
Sure. Let me start with our humble beginning. Actually, we started as a small company, and then we took almost 14 years to reach up to 100 million. It was never easy. At one point, we were loss-making company, and then we turned around the company, and then we went into public in 2011. In 2015, we acquired two companies called Ocean India. Now it's called as TJ India, and Quimby Lanka. It's called TJ Prints. So with that, we had our footprint for 200 million, but we never achieved this 200 million until last financial year. When I say last financial year, it's from April to March this year. So previously, our best record was 185 million, and year before we achieved 171 million. So last year, from 171 million to we jumped into 250 million. So this 250 million came as a result of price increases, because as you know that raw material at the peak level and highest raw material. So we passed some of the raw material price increases to our customers. Even though it was painful and we couldn't pass total the price increases, we have passed only a fraction of that, because my customer is there. I have to say it in that way. So all in all, there is a price increase impact, and also volume increase, and the mix improvement which we have done. In rupee terms increase, there is a depreciation of rupee also has impacted. But in USD terms, what we achieved is from 171 million to 250 million. With the expansion we have done in India, expansion is ready now, and we, as we speak, we are loading our expansion in India. So with that, with very minimum expanded capacity involvement in fourth quarter, we achieved 250 million. And with the capacity expansion we have in TJ India, obviously we are talking about the foundation for 300 million in terms of capacity. So it's what we need to do is load with the decent margin orders to survive during this period. So since our customer is here, you have to be a bit conservative in what we talk.
Okay, Pubudu, thank you so much. So hopefully with these new sourcing, enhanced sourcing allocations from, different brands like Nike to many other global brands, as well as these orders shift from US, from China to other Asian countries, should also be helping out our local apparel players, right? I hope we should be getting more and more orders because of those reasons as well over the near term. So probably you should be able to hit your 300 million target very soon.
Yes, as I said, we hit 250 million. It's remarkable achievement without even hitting 200 million US dollars. So another 50 million with the expansion shouldn't be a problem. Yes, we are confident of achieving 300 million provided year goes well. Previous 2 years we had unprecedented situation. Even in Sri Lanka, we have challenges. You never know how things will turn around in time to come, but we had our strategies in place, and we have our strategies in place. That is why we were confident enough to start the expansion, even unprecedented situations like when we had COVID. So as per our LRP, all the initiatives which we talked about, we have tick the box, and we will be doing that in future as well.
Okay, Prabhudev, thank you so much. So now I would like to ask my next question from Dilanka. So Dilanka, we know, actually we believe that export-oriented companies could do sort of much better in the current context than other local companies, given this prevailing forex crisis in the country. So in your opinion, how will this low dollar liquidity in Sri Lankan banking system impact the export-driven companies? And specifically, if you could mention the impact for the apparel sector, it would be really great, Dilanka.
Sure. I think if you take 6 months ago, give or take a few months, a lot of the banking system was really rationalizing the dollars between the importers. Which importer gets which dollars. And I think now it's come to a point where the dollar liquidity has even hit the exporters, where the exporting lines have been curtailed across almost all the banks, of course, at different levels, depending on the size of the bank and the relationship that you have. So it's definitely come to a point where it's challenging, because it's hit us in multiple ways, right? Because of Sri Lanka's sovereign downgrade, going to a default level, a lot of the foreign suppliers don't even extend credit anymore, and then to a point where they don't even accept Sri Lankan LCs anymore. So you need to pay them in advance, and your working capital cycle is actually quite long. When you pay your suppliers in advance, you had their lead time of 60 days, your manufacturing times of 40 days, and credit towards your customers, you're almost talking like a year before you recuperate that initial expense back. So at a time where your working capital cycle is being extended and your banking lines are being shortened, it's almost a recipe for disaster for exporters. So it's definitely challenging, and I think that it will definitely have an impact towards exports. So the only option is really to at least, to work with international banks who might not be constrained as much as the local banks, and that too with some of your foreign entities, so that you can ring fence the operation from what's happening here in Sri Lanka. So those are the kind of measures we are taking as well, because we are forecasting a close to about a 30% growth from last year. We have taken orders based on the kind of infrastructure that we have, from capacity to working capital lines to all the other things. And now that formula has completely changed, and your sales is the same. So it's definitely a tough couple of months ahead for us, and I assume it's the same for the industry as a whole. So we've got to completely shift gears, change strategies, and make sure that the impact is minimum and that we come out of it fast. But it's definitely going to be a bottleneck for growth of exporters in Sri Lanka.
Yes, Sri Lanka. Thank you so much for that explanation. So with that, I would like to now move on to a much more Hela clothing related question. I would like to direct it to Dilanka. So Dilanka, if you could explain to our audience as to why Hela opted to move to Africa. And we know that Hela is operating in different regions, different countries in Africa as well. If you could tell what are the most profitable regions out of Africa, and as well as what are the challenges that Hela has been facing while you all were operating in these regions? If you could explain on those things, Dilanka.
Yeah, I think you mentioned, volatility. Sri Lanka has experienced a lot of volatility, especially in the last 2 to 3 years. But then even if you take a 10-year window, there's been a lot of ups and downs that the country has gone through, be it from free trade agreements to natural disasters to, other economic issues. So, I mean, Africa or any other country is no different, right? Why we expanded out of Sri Lanka, venturing into Africa, was one, because everyone, I mean, global brands wants to work with global manufacturers, and we were very country specific. We could have, followed the trend and gone into Bangladesh, but we would have been, the last to enter Bangladesh. We could have gone to Vietnam, but we would have been one before the last to go to Vietnam. So in 2016, we decided to go to the next. We believed that Africa would be the next frontier, and we thought we could make a mark there by being the first mover, one of the first movers. So in 2016, we ventured into Kenya, and then in 2017, we followed suit by going into Ethiopia. Both the countries had very different value propositions. Kenya has great infrastructure, great middle management. English is the first language. So that makes it very easy for you to enter into a new continent. The equation is a lot easier, whereas in Ethiopia, you don't get good middle management. English is not the language. In fact, just within our factory, there's 7 languages being spoken, right? So that adds a lot of complexity in communication, because we've got over, I think, close to about 4,000 people in Ethiopia right now. So managing that sort of a workforce without being able to communicate is very complex. And then most of all, it's a very greenfield operation, to a point where a lot of the employees that we have, it's their first job. Per se. So, you need to train them from -1, which is where, you need to teach them life skills, social skills, why you need to come to work at a specific time, why you need to leave at a specific time, how do you use the toilet, how do you, you have to start from there, forget starting from training on machine skills. A lot of our employees, they sat on the wrong side of the machine. So that's the level of knowledge that they have. So that's the level of complexity that you go through when you go for these frontier markets. So you need to have a lot of, perseverance, patience, and even empathy to pull off an equation like that. And it's worked well. Ethiopia is definitely our most profitable location for various reasons. I mean, the duty-free agreements, Ethiopia lost their duty-free agreement to US last year, but hopefully it will come back towards the end of this year. But they've got multiple agreements with multiple countries. They're duty-free to Canada, they're duty-free to Europe, China, India, Japan, Korea, Australia. So again, for brands that have a global presence, it's that ideal one-stop location. And then, our most recent presence was in Egypt, which is, almost like an onshoring location for Europe. We can ship to Egypt within 3 days. We can ship to Southern Europe within 3 days from Egypt. We can ship to UK within 7 days, and we can ship to the US within 12 days. So it's a great value proposition for the customers that we serve, and we're seeing it by the order book that we're receiving and the customers that we're onboarding over in Egypt. So we've got a presence across 3 countries where we own and run manufacturing facilities, and across those 3 countries now we've got close to about 11,000 people. And then, of course, we manage a plant in Tanzania as well through what we call partnered capacity. And that's for a purely different reason. And that reason has purely been for the access for organic cotton. The trend is that all brands want to be sustainable, and organic cotton is the most sustainable, one of the most sustainable forms of cotton. And Tanzania was the 5th largest exporter of organic cotton. So we went there. We went to where the organic cotton is. We worked with the knitter and then use the cut and sew capacity there and ship to our customers. So, like I said, every country has a different value proposition. So we need to figure out which customer wants what value proposition and what sort of product category will make sense in that particular country. So in Ethiopia, we make very complex bras. In Kenya, we make men's underwear. And then in Egypt, we make sportswear and apparel. So that's the kind of strategy which we've been working on. And it's led to us being, a leader in those particular countries. 1 out of 5 garments in Ethiopia is from a Hela factory, same in Kenya. And hopefully that's a position we will have in Egypt soon as well.
Okay, Dilanka, thank you so much. That was very comprehensive indeed. And now I would like to move to Pubudu. If Pubudu could briefly explain to our audience the impact on TJ's cost and revenue components from the prevailing LKR devaluation. And also, I have a follow-up question. If you could also elaborate a bit on the free trade agreements that the local apparel industry has, and if there are anything new that is being added in the recent years also, that would be very informative. Over to you.
Okay, I'll mark the first part of the question. Basically, yes, there is considerable cost increases that we have seen from furnace oil. Furnace oil increased more than 100% because one of the heavy cost component is utilities in textile industry. Then fuel, the diesel, petrol, and other things. I lost a track of increases, so because it's increasing daily basis. So that's a major increase because once diesel is increased, transportation to canteen cost and everything, security, everything will increase as a result of that. So, but these increases still, if you look at our energy cost compared to other countries, I think we are better off when you convert that into USD terms. So that is why we have alignment with the fuel, the bunker oiling companies to buy fuel in USD terms also. There is a cost increase when we buy in USD, but still Sri Lanka, when we pay in rupees, it's cheaper. So then overhead cost line item increase as a result of all these increases. Then the people cost is a considerable cost because of the inflation in Sri Lanka. So we have to look after our people. So which is a significant cost component in our cost structure. So which we have done, and then the other cost. So that's the cost increase part. Then what do we do to mitigate our cost increases is we have to be increase our productivity. So for that, what we have done is we have embarked on transformation strategy in which we talked about operational excellence strategy for a couple of years that has benefited us to control our cost bases. Then we have product transformation to get into a more value-added product and get into more different products, increase our product portfolio. For example, digital prints to reactive prints and dispersed printing. Likewise, get into more different products and into fleece, etc. And also synthetic, which we talked about a long time. TJ India, we can convert entire expansion into synthetic, which we are doing it. Earlier, we started this synthetic operation with a small scale, but today it's very meaningful for TJ, top line as well as bottom line. Likewise, product portfolio upgrade and the product transformation, and then digital transformation. TJ is implementing SAP HANA, S4 HANA, that is to bring our IT infrastructure across all group companies into one platform. We will have multiple advantage with that, and also other IT related work, digital office, etc., to make sure that our digital transformation, we are not outdated and we will be ahead of the game. And then ESG framework, which is environmental, that's sustainability, environment, and then social and governance process to make sure that we look after that side as well. So those are a few things that we do in order to be competitive. Of course, rupee devaluation, there is a benefit, but that from that benefit, fair portion has gone into cost increases. And however, we will be managing it.
Thank you, Pubudu. And on
So
this.
the second part of question, Added FTAs, I'm not quite sure, but different countries have different agreement. So that's something for Sri Lanka specific. We need to new ones. I'm not quite sure. That's something we need to look at it and come back to you, Sadhini.
Okay, Prabhudu. So let me move over to the final question that I have, which I'm going to ask from both of you. So want to know, what do you think? What strategies do you think our local apparel manufacturers need to focus on to sort of overcome the prevailing challenges and to make a better future for the industry so that, growth is guaranteed? What do you all think? Dilank, if you may start by giving in your opinions on this.
Again, I'll speak from a Heller standpoint, Shadini. So each country has a very unique strategy. We can't look at it as a company as a whole. So if you take Sri Lanka, what we're really doing is we are shifting our product categories. We are trying to go into more complex products within the categories we're in, but we're trying to go from more core or basic sort of products to more complex technical products. So for example, if you are producing intimates right now, rather than making a lady's panty or a bra, we are moving into more on the lingerie side, which where it's the raw materials change from cotton fabrics to more synthetics, like you mentioned, or to more lace sort of raw materials. It will have molding, it will have bonding, it will have constructed underwires and things like that. So our industry runs on minutes, right? So generally, if a product like a lady's underwear takes 2.5 to 3 minutes, something like a lingerie would take 20 to 25 minutes. So that's how we are trying to add value. It's purely by bringing in complexity and building on technical capability. So I don't personally see, at least from a Heller standpoint, I don't see us going on and building more and more factories here in Sri Lanka. What we will do is, by moving into these sort of product categories, our revenue per hour will increase. So with the same set of workforce, we will be generating a higher top line, and of course we have better margins and effectively having more dollars coming into the country. So I think moving up the value chain would definitely be one of the ways for Sri Lanka to remain relevant. And directly or indirectly, we've also built a supply chain that kind of supports it. Thanks to the two leading players. They've brought in joint venture partners in these respective categories of synthetic fabrics to trims and laces and things like that, where that supply chain exists for us to provide solutions to the customers that we serve. So I think building on this supply chain, building on the capabilities, really how we will remain relevant and hopefully safeguard this 5 billion that we have and move towards the 8 billion. I think the 8 billion is a great number, but how we get to that is yet to be seen. And the current context and the current country situation doesn't help us to, control the narration with the narrative customers.
Thank you, Dilanka. Yes, quite understandable. And Pubudu, what are your thoughts on that? What are the strategies the local apparel players need to focus on?
I think it would be better if we have country stability that will play a key role, but that's something beyond, to some extent, beyond our control. That's an expectation. And if we can have less disruption for export industry, because if we don't get this revenue also, I think country will be in different level of challenges. So anyway, I think as Dilanka mentioned, from one side, if we can be more competitive, that is one aspect that we need to see. And then the capability in country verticality, because at least for apparel industry, we have fabric and accessory industry in place, whereas for textile industry, we have to import raw material, dye stuff and chemicals, auxiliaries, all that is imported. So we don't have in-country solution for our raw material because of investment requirement in that aspect. So therefore, dependency for imports is high. In addition to that, improve our productivity and the initiatives and strategies that we have to adopt in bringing up capability as well as cost-effective solutions. Also work with customers very closely. When I say customers, retailers and vendor partners like other countries where they work as vertical, even though they are not vertical, still they work as vertical solution. So that is what important, because from customer eyes, they see as vertical solution from the country. So that is something that we work with our vendor partners, and we have very good relationship with vendor partners and customers. So those are few things that I can think of, but of course, if we work together, we can reach up to the best what we have achieved is 5.6 billion US dollars, and the aspiration is 6 billion and getting into 8 billion, which is not that difficult. Looking at other countries' growth, especially countries like Bangladesh, the growth is like what we do for a year, they grow in 1 year. So that is the kind of a growth that they are talking about. So I think, provided that we have right mindset, right people, the infrastructure, country stability, and given that Sri Lankan apparel industry and the textile industry in right place with right players get into what we want.
Okay, Pupudu, thank you so much for that answer. So, given the limited time we have and looking at the questions that we have in our chat box as well, it seems like we have covered most of them. So, with that, this brings an end to our discussion today. I hope we were able to give in some useful insights on Sri Lankan apparel industry to our audience. So thank you once again, Pubudu and Ilanka, our two industry experts, for sharing all those useful thoughts with us today. And also would like to thank Mr. Felix Fernando as well, who joined with us amidst his busy schedule. So with that, would like to conclude our forum for today. Thank you everyone for joining in, and hope you all stay safe. Thank you.
Thanks, Adini. See you.
Thank you.
Thanks, Adini. Thank you very much. Thanks, Ilanka.